Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, before the US Federal Reserve interest rate decision was announced, the Australian dollar took a stab to the upside, and very erratically as you can see, after hitting a high around 72.95 before plummeting back towards the bottom side of the range, which is seen around 72.25. From the close, we can see that there is an inverted hammer to a Japanese candlestick. This formation occurs mainly at the bottom of the downtrend and can warn of potential reversal to the upside. As you can see here, the market is attempting to stage some kind of recovery, as we can view from the intraday price action. However, the inverted hammer pattern gets its name from its shape, as you can see, like an upside down hammer. Still, the market needs confirmation to this current pattern and would need to close somewhere above the 72.80 to reinstate a potential climb back to 73.40 to 73.90. However, there is a tug of war, and until we get confirmation, then at present this candle is just a warning of indecisiveness. And let's see how the market plays into tonight. A close under 72.25 could see and negate this candle and look for further risk towards 71.70 as a potential target. A very whippy price action overnight as the market waited for the US Federal Reserve rate decision. Now, while the choppy price action was evident, the Fed latest policy statement and comments from Fed Chairman were somewhat hawkish. That is, from the statement, the US Federal Reserve signalled it is on track to begin withdrawing some of the extraordinary support for the US economy later this year, although some US Fed officials are more pessimistic about the outlook for the growth and US job creation as the resurgent coronavirus weighs heavily on the country and pretty much elsewhere. In addition, the US Central Bank also suggested interest rate increases may follow more quickly than expected and said overall indicators from the economy have continued to strengthen. However, Powell did state a range of views amongst the Fed officials about the state of the US economic rebound and warning that high interest rates next year aren't set in stone until there is some specific timeline given, which at the moment hasn't been given. Now, looking at the technical aspect though, as the US dollar, which is currently trading roughly around 93.30, is that could see further risk to the upside if the market continues its rally and therefore looks down towards this support level seen roughly around 116.75. If it doesn't hold there, then a close under there would see further risk to 116.15 or even down to 115.55. The dollar yen fell back to the bottom side of its range, roughly around 109.25, and then rebound very aggressively, and now focuses back towards the top side of the range, which is around 110.05 to 110.40.45. As we can see here, good supply zone comes in around 110.40, and no doubt we'll see this pattern continuing in the top side of the range and looking to the bottom side of the range, and with weak technical signals, unlikely to see any sustained prices, that is, above 110. Looking at sterling, the market has fallen slightly below the level of 136.35, but still not quite closing under there. But still choppy price action, and with the Bank of England next to come up, that is, as widely expected though, unlikely to see any change, could see further choppiness. Still, the market closing under 136.35 will give further risk to 135.75 and reassess. That would mean sterling yen may return back towards the bottom side of the range, seen roughly around 148.90. And a close under there would see further risk down to 148.15. Very whippy price action. As stated yesterday, we could see we're looking for a rise, that is, up towards 1,794. But the market fell slightly short from there before the Fed announcement and got to roughly around the region of 1,788, I believe. And now from the rejection, the market is focusing back to the downside, but needs to see a close under 1,760. If so, then we'll be looking back to 1,748. And from a technical point, it looks like that's the way we are going to be. That is pressured to the downside. And therefore, the market, from a technical point, could actually see further weakness. We see a slip under 48 and look down towards 1,726. The last bullish 3 days price action for oil still looks towards that now to the top side of 72.50.60. Close above there would see further scope, maybe up towards the region of $76. That was seen posted back in early July. Let's see if we get a break first of 72.50.60 to support the bullish case. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start of the day.